The all-in billionaire Tesla stock investor Leo Koguan is basically trying to start a rebellion, it would appear to me. Look at what he is saying here. So he's basically saying that we should take away 304 million shares of Tesla from Elon, and that's because he purposefully crushed the stock because he sold so much stock. And also, he is running Twitter now, and he is calling for us to not approve any more stock options for Elon, where basically his compensation would be paid out in Tesla stock. Leo retweeted this tweet from Alex. It's saying here, there's president and CEO taking a pay cut due to stock price declines. Tim Cook will take a 40% pay cut for 2023. Now, that's a great idea, right? We should cut the salary of Tesla CEO. So here's what I've done. I looked up the salary that Elon is receiving. This is a document from Tesla. And here we can see that Andrew Baglino is only getting $300,000 per year in salary from Tesla. He does get stock options though. But only $300,000 in salary. And how about Elon Musk? How big is Elon's salary that we should cut? Okay, so I scroll up, and if you can see, Elon Musk makes zero, nothing. So just to put this on the record, I am in full support of cutting Elon's salary by what? 40%. And yeah, let's lower 0 by 40%, and I'm okay with that number. Tesla makes a California mandated minimum wage salary available to Elon Musk, but he has not accepted it according to SEC filings. So Leo wants to take away all of Elon's compensation basically from the 2018 CEO Performance Award. How was this reward structured? And let's see, really, how bad was it? And actually, is it even bad in the first place? So let's see. So Tesla at that time was worth $59 billion in market valuation. Currently, Tesla's market cap is $383 billion. So, of course, Elon Musk has done a terrible job because even though the stock crashed something like 70% from the peak, it is still 6.5 times higher, roughly, from where it was when this performance award was designed. What a terrible job he has done in just 5 years, right? And look how it was written. Once Tesla reaches a market cap valuation of 100 billion, which was almost a doubling from where Tesla was at the time, Musk will be awarded 1/12 of the total stock options package. Basically, stock options, if you're not familiar, just basically replace award options with stock, Tesla stock. Each time Tesla's market valuation grows 50 billion beyond that, he'll be awarded another same-sized slice of the stock options. So these milestones were tied to the market cap, but also all of his compensation was tied to revenue and or profitability targets as well. Elon will receive no guaranteed compensation of any kind. No salary, no cash bonuses, and no equity that vests simply by the passage of time. It was all results based. Instead, Elon's only compensation will be 100% at-risk performance award, which ensures that he will be compensated only if Tesla and all of its shareholders do extraordinarily well. And I would like to remind everyone that Elon took on a similar CEO compensation plan in 2012 when the company's market valuation was just $3.2 billion. It's now more than 100 times that. So this worked. If you're interested in seeing how that initial compensation plan worked from 2012, just pause and read all of this. Leo also complains a lot that there should have been some sort of condition put in this compensation plan where it would limit Elon from selling all of his stock the moment he would achieve a market capitalization. For example, he had to achieve a $650 billion market cap. So if he only achieved that for, let's say, one day, and then the stock plummets immediately right after that, we wouldn't want Elon to get all of his extra Tesla stock because the market valuation was not sustained. So Leo complains a lot about that. Now, was there anything in this compensation plan that would perhaps limit Elon from selling all of this stock immediately? Well, let's take a look. Measurement of the market capitalization milestones will be based on both a 6 calendar month trailing average of Tesla's stock price as well as a 30 calendar day trailing average of Tesla's stock price, in each case based on trading days only, and will thus require sustained market capitalization appreciation to be met. Also, the board put one new very important detail in this compensation plan. So this is a comparison, this is still the same document, of 2012 and 2018 CEO Performance Awards. And check this out. Right here, post-exercise hold period. So meaning once Elon exercises these stock options, so first he has to exercise them, now he can basically exercise these new stock options he has not yet. And once he exercises those, he has to hold all of this stock for 5 years before he can sell any of it. 5 years. Also, Leo says that the board never basically pushes back against Elon. Well, here's an example of the board pushing back against Elon Musk. This is a transcript from a trial about Elon Musk's compensation. So this is Elon Musk speaking. And the board also said that I think the shares could not be sold for a period of 5 years after the exercise of the options. I should say that the 5-year holding period is perhaps that was my biggest concern, because it would mean that either I would need to run the company for another 5 years after the stock vested, or I would need to find someone who would run the company well enough to not cause the valuation to subsequently decline significantly. So Elon understands. He has to take care of Tesla for at least 5 years after he exercises these options. So I don't think it would be fair to say that the board does not push back against Elon at all. Clearly, this was quite a pushback. Elon did not want that condition in the performance award. And Elon's reasoning was that a lot can happen in 5 years, which of course is true. But I think board did exactly the right thing. And there's a huge incentive for Elon to make sure that Tesla does very well. Leo also retweeted this: independent of the outcome of a Delaware trial, which basically is trying to take away the compensation that was awarded to Elon Musk because of his great performance, because Tesla stock exploded. Without Elon, I don't believe that would have happened. He's saying that, independent of the outcome of that trial, an amendment to Musk's 2018 compensation plan should be made to reflect the decline in market capitalization milestones caused by the Twitter acquisition. Now tell me, exactly how differently would you have designed that compensation award? So Tesla stock had to hit a $650 billion market cap, so that's just roughly, just to keep numbers super simple, that's around $200 per share. And for how long was that market cap sustained? For about 2 years, it was sustained. So how much longer would you have wanted the market cap to be sustained at these levels? Also, keep in mind that the market cap of Tesla at one point was almost double of $650 billion, which is what was required for the CEO award. Also, be extremely careful about requiring Elon Musk to put in a certain number of hours into something. Mr. Musk, back in 2018, would you have accepted a compensation plan that prevented you from being the CEO running other companies? Elon says no. In fact, when you became the CEO of Tesla many years before, were you already the CEO of any other companies? Yes, I was running SpaceX. And if we make an ultimatum and we demand that Elon focuses on Tesla and not on Twitter at all, then there would be a possibility that Elon would decide, okay, Tesla, I basically solved what I had to solve. We are definitely transitioning to EVs now. There's no question about it. All of the legacy automakers, they are trying to transition as well. And there are some, for example, BYD certainly has a lot of EVs already, and they are producing at a pretty decent scale. And eventually the transition will happen regardless whether Elon is involved in this or not anymore. So in a way, he has done his most important work already, and he may decide, okay, it's not really necessary for me to be involved, so I will not. I would not want to see that outcome. So I would not push too much against Elon wanting to spend some time at Twitter. I don't think that's really necessary. And these are 48 reasons why I only own Tesla stock in my stock portfolio. My name is Matt Post. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.